I want to tell you guys, I'm going to introduce a question today in the mailbag that I have been avoiding for months. I get it all the time. And I just thought that it was too much of a generic question and it was too difficult to answer, but I can't avoid it anymore. It's the most popular question that we get. And Herb wants to know, how is the market in Long Beach right now? So I'm going to give you some statistics that I looked up in preparation for this. And then what I want is your opinions on this after I give the statistics. And I'm actually I think we're forced now to introduce an actual segment about this. So we're going to do segments each week on how the market is in different areas and get this information out to people because, as I said, it is by far the most popular question that comes in. Yeah, I know. And and I just I can't avoid it anymore, so we're going to have to find a way to answer these questions for him. So what I did real quick was I went on the PWR website, and here's some good radio, but wherever the camera is, I got some statistics, broke it down to a few statistics that I thought were important.
Can anybody
so you guys
go to that
listen
website?
close. Yeah, no, anybody can't go to the PWR. Some can. I don't know, Scott. Don't ask me that question.
For certain items, you need to
Look,
public
I
information?
told you
That's all I'm
I
asking.
told you we're gonna have a segment on this. How's the market segment pretty soon, and I'll have all this stuff figured out. But for now, I pulled up a few things year to year, and all I got was February because I know we're now in April, but I got February, and so
It
what?
takes time to collect that data.
It does take time. So, average sale price in Long Beach, February to February. And I broke it down into distressed and traditional. Distressed from $279,550 to $268,440, down 4%. Traditional $459,900 to $448, down 2.5%. Number of transactions, distressed 1,100 to 1081, pretty much a wash. And traditional 864 to 1,100. So we went up year to year, 27.3% in traditional versus distress. And when we talk about distress, that's foreclosures and short sales. And then two notable pieces of interest, inventory in Long Beach is down 40% or close to 40% from February last year, meaning how many houses are for sale.
There's a reason for that.
And 47% of the sales in February of 2012 were distressed, down from about 49%. So what do these trends, and just the ones I'm talking about, what do they mean to you guys if you were to answer this question from Herb, how's the market in Long Beach? We'll go in a round table. Frank.
Well, first off, those numbers are going to change in the next 3 to 4 months because they are what they are right now. The inventory being so low is creating multiple offer situations, okay? The market is getting hot in Long Beach. I had a property on the north side, and I had about 21 offers in 10 days. And people were bidding up and bidding up and bidding up. Right now, if you were to look at the statistics, the foreclosure rate or inventory on market is above that of last year. I think it's up 17%. But, and you need to verify this with me, are buyer applications not up as well? I mean, people are on fire out there to buy.
Yeah.
So the inventory increasing doesn't matter because the buyer demand is still surpassing it, which is creating multiple offer situations in Long Beach. And in a few months, after these homes are gobbled up at these higher prices, you're going to start to see an upswing in some values now. Unless more foreclosures hit the market and oversaturate things, I think we're going to see values climb. But I do think the inventory. I know they won't do it. They won't do that. But the inventory for foreclosure is going to keep steady, if not just growing.
Okay, Alissa.
No.
Either way, pick a microphone, any microphone.
I'm seeing it also pick up, not only because it's going to be the spring season, but this is not working. What I'm seeing is there's going to, at least on the buyer side, there's a really huge challenge for them. You really need to set your expectations to be looking for longer than what you normally would have been a couple years ago. And it's exactly because inventory is less than what it is, and you're seeing a lot of competition. And it's not just competition with other first-time home buyers, but you're also competing with investors. Okay, so as a buyer, and in particular first-time buyers, because that's who I generally deal with, really set your expectations to be looking for a couple months and don't get discouraged. Just know that this is part of today's market and be ready to go. And if you like something and you know that's what you want, give in your best offer that you can. Don't try to play this hardball thing.
When you get that first counter and it's highest and best,
really put your highest and best. Yes.
Okay, Scott, what do those statistics mean to you?
Not a lot.
Okay, Kevin. What are those?
417 or less, hot as hell.
Yep.
Units, hot as hell. And if you are a seller, equity sales are where it's at.
Well, they're up 27% traditional. I mean, that was actually a statistic that I was kind of
so
enjoying.
Here's something that's interesting. Is this because they're finally giving up because they don't think?
I think that's part of it.
Because they don't think values are going to go back up?
I think what is happening is their up leg is now affordable.
Oh, their up leg is now
their
affordable. Okay, that makes sense. Because
so their next purchase.
Well, because their value continues to drop.
Correct.
But if they can get what they need, the 800,000 move is 7.
Right.
And that's what they're trying to capitalize on, and that's what we're seeing.
And I think after 5 or 6 years of their values dropping, they're like, okay,
they're kind of
enough.
Like, this is the time.
Right.
You know what else I'm seeing?
That $1 million house.
So this is the move up moment. Can I make a quote on that?
It is the move up moment. I would
move
say
up moment.
Yes.
Here's the reason why I said not much. Because what you're giving me is what's already gone. Right. What's happening now, you're not going to hear about for 30 or 60 or 90 days.
Right.
So the trends and statistics and, these things don't mean a whole lot. There are certain economic factors that may drive your decision to buy. Interest rates are unbelievably low. They're going to be that low for a little bit. The cost of FHA loans are going up on Monday pretty significantly. So the cost to get a loan is going up.
There's a nugget.
Home prices, I believe, are still going to continue to fall. Foreclosures, there was a moratorium for the last year while the whole robo-signing thing went.
That's going to ramp up.
Unless you're some kind of freaking real estate scientist and you have the ability to analyze all the statistics and pinpoint this, just listen. If you're in a position, if the time is right, you just need to buy. Don't worry about statistics and analytics because
thanks for screwing up my whole segment, Scott. Don't worry about it.
No, because this is an important part of the statistics because you're going to hear one group of people say this is the statistics that are important.
Right.
You're going to hear real estate agents always telling you now is the time to buy, and they're going to extract the statistics that make their case look best. Whoever is giving the statistics are going to extrapolate whatever numbers support their point.
But I do think, as a title guy who calls on all of the real estate offices,
right,
good and bad, okay, I still think it's a great time.
It is.
It absolutely is.
And here...
No, it absolutely is. But I'm saying...
It's the move-up moment.
It is the move-up moment.
Yeah.
Well,
here's the key, though, for
I told
buyers.
you this was a segment, not a question.
A lot of first-time buyers, because I get this question asked a lot as well. I go, let's look at your numbers, because the bottom line is whether the media is telling you it's a great time, because it is, whether it's you're a realtor, whether it's your family, the bottom line is a good time for you to buy.
Right.
And if it is a good time for you to buy, then definitely you're in luck, because it just happens to be probably the best market that we've seen for purchasing.
And the homes are priced right now.
Really
Kevin
well.
just mentioned that the banks are pricing the homes right. They're not going. They had a tendency before to price things maybe a little above market to get people to chase it. Now they're coming a little below market, and boom, it's creating absolute. I'm not going to say chaos, but a controlled chaos of multiple offers on literally every property that comes out.
It's almost like the government's not watching them anymore, so they're not. They just want to move inventory. They just want to move homes now.
Yeah.
Maybe we should go to a 2-hour show, and the second hour will be how's the market.
But they're moving they're moving old inventory for what? To prepare themselves for the new inventory, which that's kind of a scary thing that there is more new inventory, but there's quite a bit of it coming down the road.
All right, so we need to get on to this last segment, but we're going to do a segment on this from now on because it's obviously more than a mailbag question because those typically take 3 to 4 minutes. But the thing that interested me most about the whole thing is in economics, it's supply and demand. And when supply goes down like it is now, demand is supposed to go up and prices are supposed to go up. Traditionally, they always have, yet prices are either stable or just slightly 2 to 4% down. So this is a very strange economic model for real estate. How do you have less inventory and prices stay the same? So we're going to talk about that later.